Start.
Hi, everyone. Myself, Sunny Mohanty. I'm the Regional Director of Last Weekend based in Singapore. Welcome to another episode of VC TV, the Venture Capital TV from Lay Token. So we have an amazing panel of speakers: Peter Plott, Noble Dracklon, Justin Clapper, and Gary Fowler. So I would like to start with Peter first. Peter, can you please start a short introduction about yourself, your company, what you're doing right now? Then I'll start the questions. Thank you, Peter.
Thank you, Sony. It's a pleasure and honor to be here this afternoon, calling in from London. My name is Peter Plott. I'm the Executive Director of the Weimer Family Office based in London and Denmark. We focus on transactions anywhere from 150 million to well over a couple billion, predominantly in the real estate space, but we also finance opportunities in anything that's cash flowing in hard assets. So oil and gas, natural resources, metals and mining, big focus on alternative energies. So that's predominantly what we focus on. And most importantly, Sony, we're looking for good partners that would be good custodians of our multi-generational wealth. As a family office, we're quite different than a bank or a private equity fund or credit fund.
Okay, I understand. Thank you, Peter, for that introduction. Next speaker, we have Noble Dracklon, who has been a very regular speaker on our VC TV. Over to you, Noble, with your short introduction, and there we go.
Thank you, Sony. My name is Noble Dracone. I'm the head of Dracone Capital Management. In Dracone Capital Partners, we actually work in the pre-seed, seed, and Series A space. I'm also advisor for M Accelerator in Los Angeles. We've been really focused on entertainment. A lot of our energy is spent in the fintech space as well as in the IoT space. Very tech heavy after 26 years in the financial industry and having written 7 books. My whole focus now is to kind of see and shepherd a lot of pre-seed ventures into the angel VC world. We have a small fund. It's a $40 million fund that we're raising for M Accelerators, and we're expanding and growing.
Excellent. Welcome again to our show.
Thank you.
So next speaker, we have Justin Clapper. Hi, Justin. Would you like to unmute yourself? Yeah, which you've done, and start with a short introduction about yourself. Thank you.
Sure. Thanks so much, Sunny. Hey, thanks so much for having me, and good morning from New York, and nice to be here with everyone. Justin Clapper from Charge Ventures. So Charge is a early stage investor, very similar to Noble's fund. In New York, we look at enterprise and tech, but we also look at other verticals. We're a generalist fund, but we're really looking at places where technology can be the wedge and kind of drive growth in across all verticals. And just kind of personally, my background, I'm prior U.S. military, and kind of transitioned out prior, did a pass-through banking, and then did a little bit of time to startup before my time in Charge. So that's me, and again, excited to be here with all you guys. Wow,
military, fintech, banking, amazing. Thank you, Justin. So we move to our next speaker, who is a regular speaker at our VC TV as well, Gary Fowler. Hi, Gary.
Hello, good morning.
Good morning.
Afternoon, or wherever we are today.
Yes.
My name's Gary Fowler, and I'm a serial entrepreneur. I've got over 35 years worth of startup experience, 15 startups, over $1 billion exit, Nasdaq IPO. I started the top corporate accelerator in the world today, private. It's GVA. I started about 10 years ago. I started the first acceleration program in Russia at Skolkovo Startup Academy. So I've got a lot of startup experience. And so what happened is I saw that there was a need to really go beyond acceleration, startup 3.0, and that's going global. So I started GSD, Get Shit Done Venture Studios. So we look for resilient teams, revenue producing teams and AI. I'm also a writer. I've written 60 articles in the last year on artificial intelligence and write for Forbes, just a lot of publications. So our job is to really take those companies to the next level using our contact network and advisors like the former chief security officer of Apple, one of the board members of the NAACP, just a lot of really quality people to be able to get those companies moving forward.
Awesome. Fantastic, Gary. Welcome again to OBCTV.
Thank you.
So next we have Lucas Couch, who is the CEO and founder at BitFi from Brazil.
Hi, everyone. It's Lucas Schoch. It's a German name. No, don't worry, everyone do this. It's a very hard name. So I am the CEO and founder of BitFi. BitFi is a cryptocurrency wallet app, just like a cash app, but with cryptocurrencies. And we provide mass adoption here in Brazil. And this is what I'll pitch for you guys later.
Absolutely. We'll love to hear from you, all the fantastic stuff that you're doing in Brazil. Thank you, Lucas. So we have our next speaker, Eddie Ler from Singapore. We are friends. Hi, Eddie. How are you?
Hello, everyone. My name is Eddie Ler from Singapore. I am an investor with Vantage Venture. We are super early, but we can invest up to $1 million. We like enterprise SaaS companies. At this moment, we are also closing a seed round in an education tech company. The press release will go out. So even in this COVID environment, it is difficult to make investments, but deals are still happening. So happy to discuss more and share stories, exchange notes with everyone. Okay.
Excellent.
My name is Eddie. Happy to be on the panel. Thank you.
Thank you, Eddie. Thanks a lot. So, okay, speakers, we're going to have a couple of questions and go around everybody to take your thoughts. So first, Peter, I'd like to have this answered from you. What has changed with COVID-19 in terms of institutional and private equity investment?
Oh, that's a fantastic question, Sony. So let me stage it in a couple ways. First of all, from the Weimer family office side, not much has changed. We continue to focus on funding real estate developers around the world, both residential, office, and hospitality, you might be wondering about. And we've put about $3.5 billion in capital out in terms of engagements and term sheets since the pre-COVID, so let's say since March 31st. What we are taking a lot more time on is in due diligence. So we're spending a lot more time with the management teams, making sure that they could execute, making sure they have great track records. In terms of our coupon on debt financing, that has remained relatively stable around the mid to high single digits. However, on any equity that we put to work, the IRRs must show low to mid 20 type of levered IRRs. Otherwise, the project's not going to be profitable enough for us to commit our equity capital. So that's us from our family office. Let me tell you a little bit about the private equity and credit opportunities world. I think the post-COVID world has opened up a opportunities, and I think I'll break that down into three phases. One is forced liquidations, where companies are being forced to liquidate. Real estate developers are being forced to liquidate to raise capital. That's already started in late March, and I'll continue on for maybe the next 6 to 12 months. The second phase is liquidity needs. Many companies don't have the liquidity. They might have solvent balance sheets, but they'll need liquidity. And so there's definitely a need for liquidity in terms of either bank financing coming from family offices, other private equity funds, or basically securitizations. The third phase is basically those that survive will need to repair balance sheets. The repairing of balance sheets will likely force a consolidation and a trend towards more mergers and acquisitions where the strong survive and the weaker are consolidated up. I would argue that the massive amounts of unprecedented liquidity that's come from the Federal Reserve and the ECB has led to a significant bubble in equity markets, and that will likely crash sometime over the next 6 months. And if you look at the higher technology companies that make up the big Nasdaq, they're significantly overvalued. a number of debt securities significantly overvalued, and you don't need to be a rocket scientist. History repeats itself. So just look at charts going back to the Great Depression. What I would say is the trigger point for that is probably twofold. One, we'll likely start to see second quarter GDP being released from the US and other developed countries around the world. That'll likely show 15 to 30% declines year over year. So that's going to be a concern. Unemployment has not stopped rising. And if we get a renewed spike in COVID, the global economy will shut down again. And that will lead to massive falls in aggregate demand. And that'll cause a resetting of equity and debt markets. The Fed, the ECB will have to, again, come to the rescue. But all of this basically means we're being much more diligent on the management teams that we invest in, and we have to make sure that the IRRs are there.
Excellent. Very good points. Thank you, Peter. Next, we have Noble. Would you like to take the same question, please?
Peter gave a thorough breakdown of what the kind of landscape we're about to face into. And our mandate's a little bit different in the respect that, we anticipate an aggressive stagflation heading our way, in which, everything's going to be kind of at a standstill. But that still leaves open a wide berth of individual companies that will be able to take advantage of a lot of the technology. And that's why we're kind of really focusing very aggressively on entertainment. We're focusing on augmented reality, virtual reality, and we're pushing into the fintech space. These areas, and that's why I'm happy to be, here to watch what BitFi has to say, particularly in Brazil, which is one of the most aggressive places hit by COVID right now. So when we talk to the family offices that we work with here domestically in the US, a lot of them are looking at what's happening in both esports ventures, music consolidation, everything that's really focusing on consistent returns on investment based on consumption that's in entertainment that's just essentially going to go forward. We also look at the fintech space and the fact that as the economy begins to change, so do people's buying habits and how they spend. And so we're very excited both about the blockchain as well as how people will be transferring and utilizing quote unquote money. People still have kind of ignored the fact that the US government has already looked at the opportunity to issue cryptocurrency to people. One of the things that they wanted to do and was actually put into proposed is that the stimulus payments that would come would not be in the form of cash. They would actually be in crypto. So it's on the horizon that in order to mitigate a lot of the things that Peter's already talking about, that a lot of those agendas will be driven forward more aggressively to push forward some kind of crypto agenda on an overarching level, because they can't continue to just print money. If we have any intent on continuing to have the dollar where it's at, then, so I've been trading currency since 1996, and I watched literally the dollar having a strong run, and then all of a sudden becoming on parity with both the Canadian dollar and the Australian dollar, and now we're back to levels back in the 90s. So we know that that's a horrible thing for the United States to face, where the dollar's strong, but there's really no global economy. The only benefit, and the only thing I kind of diverge with Peter, is that while the stimulus may have impacted the stock market and there may be some kind of equity issue, globally, the world is in chaos. And so the flight to safety is a lot of foreign banks and foreign relationships that we know are driving into the US equity market because their domestic markets are just not sustainable. And so it's one of the issues that, the flight to safety will continue to bubble, but I don't believe the quote unquote trickle down effect will have a huge impact on people's day-to-day lives. As the shutdowns function, the only place to go is to really push their original agenda and start driving crypto, because they can't continue to print money and then expect outside investments to bolster the equity markets. So at the end of the day, I'm pretty excited to really be working on a lot of these new founders that we've discovered. I love the education technology sector Eddie was bringing up. We love that space, and there's more to come. We haven't invested, but we're looking at a lot of opportunities there. And then contactless food delivery and the like. We have one company, an Italian company that we consulted and supported, that just got a $10 million advancement on a contactless pizza kiosk where you can get your own pizzas. So we're very excited about the new companies really taking the kiosk and turning it into success. And that's really where we're at this time.
Amazing. Good to know about the economy of US and the rest of the world and contactless pizza. I mean, wow, kiosk. Amazing. Thank you. Next, we have Justin.
Yeah, I mean, our particular, slice of the pie in early stage, and we focus specifically in New York City, but typically, but if you look, hard to argue with the kind of the storm clouds gathering, at the macro level, right? And I think Peter did a much better job at looking and kind of explaining that than I could. But just to reiterate, I think that, and some of Noble's points, I think that there are tons of opportunities. I mean, we haven't invested in it. I mean, I want to hear more about that, the pizza machine, but we're seeing there's a lot of opportunities, and so what we saw was a big pause across the board, and you could say that was attributed to testing or just the shocks across the system in kind of tail end of Q1, beginning of Q2, people not being comfortable kind of letting go of meeting in person, doing due diligence kind of over Zoom, right? People are kind of the flattening of the complete flattening of the process. And so then that picked back up. And then while people expected deployment to fall, it didn't fall as severely as people thought it would. And so it's down year over year, but not as severely as it was expected. And so that, is that positive? Is it not? Who's to say? But I think that, the thing that we're kind of expecting is consumer spend, depending on your sector, is, if you're an airline, it's really bad. And if you're Shopify, it's very good. So, it could be, the earnings are mixed right now. And so if you're a startup, depending on the niche that you're operating in, you might be having a very interesting summer. So if you've been running your runway and you've been burning and you've been holding out for the fall to raise, there might be a very mushy earnings season coming up for the fall. And so there might be some really interesting opportunities, and there might be some really, to Peter's point about consolidation, there might be some really interesting things that start happening in the fall, especially the US CDC saying that there's more likely than not going to be a second wave. And so how does that affect macro factors? How does that affect the strength of the dollar? How deep can you QE, right? I mean, I know that they have talked about using blockchain, or they've been using secured payments, so they're not using paper checks and sending them to dead people, and some of these other problems that we've seen with, direct economic stimulus. But I mean, the system is coded on COBOL, and at one point they were like trying to rustle people out of retirement to code in COBOL so that they could get, put money into people's paychecks faster and get people off unemployment lines faster at the US state level. So it's a bit of a mess, just because, and that's like the magic of federalism in the United States, if you're not familiar, fortunately or unfortunately, right now, as much of the world seeing. And so, I mean, I would say at gross level, it's going to be interesting. And there's always opportunities. And so we're seeing that at the very early stage, we're seeing lots of levels of opportunity in every vertical. And just depending on which vertical you look at, there's different depths of opportunity. But I would like to hear more about that remote pizza of it. But no, those are just like kind of my initial thoughts.
Sure, same here. I'd like to hear that as well. Thank you, Justin. When you said COBOL, it just brought back memories like 2 decades back when I started off programming. Thank you for that. So next speaker, we have Gary Fowler.
Sure.
Over to you with the same question.
Good to see you again. So I have a different opinion, and I've expressed it a number of times. So as I said, look at this digital transformation that we're going through today. We are online doing an event. This is really perpetuating itself throughout our entire global economy. We have to do things differently. So those type of technology, in fact, I just wrote an article about Zoom and the digital transformation a couple of days ago. I'll share with you. But I believe that we are really at a really pinnacle point where things have dramatically shifted, and the companies that invest in those technologies that are having a profound impact on the economies throughout the world. Think about it. How does a company from Hong Kong go global if they want to come to the Silicon Valley today? So think about all the mechanisms in place and technologies that can be used to be able to do that. You need a network, you need the contacts, you need people that have experience. Those are the kind of things that are going to be critically important. So I'm looking at this a bit differently. You know, the thing that in a good way, fear drives people away. I love it because it gives you buying opportunities. So if you want to be driven away, I love it. Peter, I love what you said. You're right to my heart and soul. I got to tell you, because, you know, on that side of it, I'm looking for opportunities, and I'm looking for the best scientists in the world. I don't care if they're in Mumbai, Moscow, Kiev, it doesn't matter. I'm looking for them. And by the way, in the early 2000s, I was involved in a company out of Israel called IET. People said it would never, ever go to the global markets. I renamed the company Click Software. In the darkest times in 2000, we did an IPO in Nasdaq. People said we couldn't do it. It wasn't going to happen. We did it. I came up with a family of products as a senior executive in the management team. That company was sold in August for $1.35 billion. I can tell you directly that you can get shit done if you want. So it's just looking for the silver lining. If you focus on the bad, you get bad. If you focus on the good, you get good. And I'm not saying don't be realistic, but look for opportunities.
Oh, wow. Always, always just look for the good in the bad. Thank you, Gary, for this very optimistic, points for us, for our audience. Thank you. So the next speaker we have Eddie. Hi, Eddie. So I'm going to tell the question again because I think you were not there. So what has changed with COVID-19 in terms of institutional and private equity investment?
Yep. So I'm a former World Bank consultant. For the longest time, I always preach to my clients, which are the central banks and the emerging market banks, about digital transformation. Okay, guess what? COVID-19, it is the best driver for digital transformation.
Absolutely.
You don't need to explain to the C-suites and the boards why you need to digitize, why you need to have resiliency into your workforce. People just get it. Currently, I'm doing very early stage investing, pre-seed, seed, pre-A. Frankly, the valuation hasn't changed much. But the way in which we do due diligence is different. Obviously, it's a lot of Zoom calls right now. And the spaces we're interested in will be remote work, live, and play. I wish we can eat remotely as well, like pizza delivery, but there's that offline element. And at this very early stage, the reason why I say valuation hasn't changed much is because it is all based largely from the founders' vision, their energy, and early traction. Yeah. And this will typically take like 7 years, 10 years or longer for them to take shape and to IPO. I wish all companies can IPO very well, just like Gary's example. So we are still investing. We always get asked this question. We are also starting to see non-standard terms creeping in. If we talk about Coco from 20 or 50 years ago, we are starting to see non-standard terms creeping into Asia, like those terms that you see 20 years ago in the dot-com boom. Happy to discuss more later. But business goes on. We are still open for business. We are still investing. We are still supporting the economy, but in a very small way. Yeah.
Okay, thank you. Great. Business goes on even in the time of crisis. And the non-standard terms, I'd like to know more later. Thank you, Eddie. So I have my next question. What should startups be doing post-COVID to build a sustainable business, scale, and attract the needed investment? Like we are talking about the pandemic right now, or what happens post-COVID? I mean, what should they be doing? Because we now experienced this pandemic. How should they be thinking post-COVID? Peter? Peter, you were on mute.
I thought I had myself off, but again, I'm not a VC or angel investor. I'm a kind of boring nuts and bolts, cash flowing, existing business type of guy. So I'll just give it from a more 10,000 foot overview. The three things for us is in the post-COVID world is a more rigorous focus on ESG. And that's basically, obviously, the environment, social responsibility, corporate governance. Now, that term has become very sexy in recent years, and everybody's saying one shape or another they want to be ESG compliant. Some mutual funds have ratings regarding that. For me, I've been an investor for over 35 years, and to me, ESG is at the basis of all investments. Basically, let's start with corporate governance. If the management team doesn't have credibility, okay, there's a problem right there. I don't care how good the finances are. I don't care how good the business plan is. You have to have a credible management team with experience and ability to execute. In terms of social responsibility, okay, all companies, and particularly in the post-COVID world, need to be more socially responsible across their CapEx decisions, across their supply chain, and the products they produce. In terms of environment, going back to the days of tobacco, oil and gas companies, and the damage that they've done across different parts of the developing world, companies need to be socially responsible. They need to be environmentally friendly. Otherwise, there's huge amounts of liabilities. And I would argue that for the millennial generation, if they look at when they become my age in their 50s, basically ESG is not going to be something that everybody's talked about. It's just going to be part of the investment criteria. Just like I said, over the last 35 years, it's all part of my toolkit, always has been. So I'm, again, going to just be focused much more in the post-COVID world on that ESG compliance among companies. And I think if you are ESG compliant, you will be able to attract more capital.
Awesome. Great points, Peter. Thanks a lot. Same question, Noble.
Yeah, I think that, companies have to prepare for post-COVID now.
Right.
I don't believe that it's a continuous flow from where they are today to where they're going to be, let's assume 5 years from now. The hope is that COVID will be all over and we'll have to be able to tie us all up in a bow. But the behaviors that people are now learning, unfortunately, are going to last, I really believe, for the next 10 years or plus. I mean, it's a generational issue, right? I have young kids who right now who are 4 and 2 and 9, who for a long time are going to be, for the rest of their lives, actually, almost like the Great Depression, are going to be concerned about germs and contact and moving and how you travel. So this is now part of the gestalt. And it's one of those things when they say the new normal, it's a really sincere idea that there's going to be a whole group of people for quite some time who are going to be afraid to be in contact with other people. So the businesses that need to be established now have to already have a core base in which they already prepared for this idea of a new normal. So I think that most startups, and we consult with a lot, and while we don't invest in every company that we work with, we do help them find funding. And so the ones that come to us, we really try to explain to them that you have to have a business that is at least sustainable for the next decade, in the idea that it's contactless, that you actually are providing some kind of glue where either it's entertainment or the right software that's innovative and forward thinking. You need to be in spaces that are both IoT and frankly, the idea of us talking all on screens is going to go away. They've gotten thinner and thinner till they'll eventually disappear, in which we'll be utilizing augmented reality, contact lenses, or something to have these kind of communications. So, I'm a futurist in the sense that I really believe in the next phase of technology is really set to give us a world that is fully interconnected for those people who are, I guess, who are in the have section. In the have not section, you really have to focus on a lot more sustainable products. You have to focus on recycling, which is a huge issue globally. We're talking to a company that takes old tires and turns them into new roads, and has figured out a way to do that. We've talked to companies that are coming with new processes to break down different energy composting to provide ethanol and just other forms of energy. So it's a brave new world, I guess, that we're living in. And so I just tell most founders, don't really hang your hat on what you see today as what you potentially believe is successful. You have to take the step beyond in order to drive the success of your company.
Excellent. Startups, please pay attention. Thank you, Noble. Justin, over to you.
Yeah, I just, the ESG thing Peter was mentioning, Larry Fink, BlackRock put out this, this ESG letter, and, people like to write off ESG as, kind of goody two shoes or like kind of high-mindedness. But Larry Fink's letter, I think people, the headlines was, that Larry Fink's like, he's getting soft and he's like, oh, he's gone green. But really, the big bolded kind of in the middle there was that climate risk is investment risk, and really that we haven't priced in the climate risk, right? And I think that's kind of Noble's point too, right? Is that COVID, that as habits change, that needs to get priced in. And so that the startups, at least on our end, at the early end, things that are, whether it's carbon markets or however these things get regulated, that, the startups that are built to scale under new regulatory structures, whatever those look like, are going to be the ones that win, that are built to grow underneath, and they're built to kind of win under those new pricing structures. Airbnb, there's examples, like hundreds of thousands of examples of this, right? But
Yeah.
some prominent ones come to mind, right? Like Uber, taxis are regulated, Uber isn't, so it wins because they strip away old regulation, and then there's some minimum regulation that they have to meet, which turns out is just met by most US auto and then foreign or ex-US auto manufacturers just when they make the vehicles, and then there's some background checks, right? Or you have Airbnbs, and that's met with building codes, and then there's some background checks on hosts. So imagine that you start pricing in carbon, right? Or you start pricing in COVID risks, right, for hospitals, or you start pricing in financing risks, or if there's FINRA or there's other risks that, for Robinhood, right? There's a FINRA risk that gets priced in for whatever replaces Robinhood. So just as these things go on, if you're a double blockchain trader, and you're trading in some, whether it's Ethereum or it's some, some derivative, some kind of double derivative blockchain asset, that your risk is priced in there. And you have to pay for the carbon that you're producing as you mine, right? Then maybe Bitcoin isn't as lucrative as it was before. So these are just kind of ways that things could change, I suppose.
Great points there, Justin. So Gary, over to you now.
Yeah, can you repeat the question? I just want to make sure
Yeah, sure. So what should startups be doing post-COVID to build a sustainable business, scale, and attract the needed investment post-COVID?
Okay, that's what I thought. Okay, so I mean, this is like, the KISS principle, the keep it simple, stupid principle. So what are the things that are important? You want to make sure you have revenue, right? You want to make sure now you have it. You want to make sure then you have it. You want to build a firm foundation for your company. You want to make sure you've got a great team. You want to make sure you're looking at the future. So, I mean, look at how the world is changing, right? With recent advancements in robotic process automation, how it's going to change all our lives and how those startups can take advantage of it. They need to look at how they can continually optimize their company in the future, post-COVID, now to sustain their business, then to be able to optimize their company. So what we have to look at is, and they need to look at, is opportunities that they can really forecast where that technology is going to be and how it's going to impact their company, and continually iterate, customer discovery, iterate to figure out if they are in tune with where the market is. So the fundamentals are critically important, you know, and that's the way to build a sustainable business. I've always said that. I'm not into, you know, let's just invest. I think the companies that I work with, all of them have revenue. One of our companies started a year ago. This year it has $11.4 million in revenue. Last year, this year it'll do 20. I mean, we're looking at companies that have a dramatic impact. So I would say to the companies, make sure that if you look at the future, you're going to be relevant. Continually put your hand on the pulse to make sure that you're in tune with the market. Make sure you've got runway, right? You don't want to get into a position where you don't have enough runway. You don't want to run out of money. Look out in the future, a year, 18 months, make sure you have the runway. The net is build a sustainable business model that's in tune with the market.
Great points. Thank you so much, Gary. Always
Sure.
useful. Eddie, now I'll move to you. The same question.
Okay. Yeah. So the question is, what should startups do to build sustainable business post COVID-19? Okay.
Absolutely. That's the
Yeah.
question.
My message is, first of all, startups and businesses, they better survive this COVID period because bankruptcies are going up everywhere else, whether it's chapter 9 or 17 or 11. And these are many big companies. Of course, it is a function of legacy of offline businesses, just like retail. So many bankruptcies here and in the US that I see, and also in Asia. But this is not because of COVID-19. It's because for the past 20, 30 years, there's been a rise of e-commerce. And e-commerce is still a small part of global commerce, even for Amazon. But because nobody is traveling to buy clothes or whatnot, and therefore they go into bankruptcy. How do companies sustain themselves during this COVID period? It can be for 12 months to 24 months. It's all about the cash flow. I used to be a corporate banker. Without cash flow, there's nothing to talk about it. For early stage startups that I'm involved with, it is about delivering traction, really get to revenue quickly.
Okay.
For those of my investees that are already generating revenue, it's about getting to break even quickly. It is very challenging because for very early stage startup from the C to the pre-A and the A, they are still figuring things out. They're still a baby or a toddler. So it is an almost impossible task because they're meant to be high growth and they need to consume a lot of capital. Pre-COVID, it's okay to have like up to 2 years cash flow for very young startups. In this COVID world, I'm telling my startups, make sure you have enough cash flow for 3 years. If you don't have enough, go and raise. I'm sure for the more mature companies, they have a different consideration. Interest rates have come down. To some of my investees which are at Series A or Series B, whatnot, if they are suitable to raise a venture debt round, it may be suitable to extend that cash runway just to preserve have that optionality. There are certain industries that we don't look at during this COVID because we don't know how long it will take. 1 year, 2 years, 3 years. Look, nobody has seen vaccine. If some president has told me that a vaccine is coming out soon, I think that's bullshit. Okay, we're avoiding some industries that we don't think will do well in the near term. Fashion, we don't see people wearing too many nice clothes or wearing too much makeup or hair for the near term. We think travel will be affected. So obviously the counter example with Zoom is just skyrocketing, right? If you invested in Zoom in 2019, their IPO, I think you're sitting at the 70-time X gain, which is better than all the VC or PE or any investment. So well done to the Zoom investors. Health tech is very interesting, but we don't understand much about health tech to be able to participate in that. So you need some expertise, right? Transport, we like micromobility. So public transport where if I were to be squeezed like kind of sardine in the train or in the metro, I am not able to fulfill the safe distancing rules that the government set for me. So how then do I travel to work or to live? So we think micromobility may be interesting. The likes of car sharing, we think it is old world because it still means you need to have somebody to drive you around. We like those self-driven, or if you like, electric vehicles where it is more sustainable, at least on paper, and also where the risk of being infected is less.
Right.
Apart from your previous users. So that's how we see it. So a key message is survive the COVID as one, have cash flow, and try to borrow money or raise venture debt and talk to your current investors. Valuation is a different story, right? There's no free lunch, but it's really to survive and live to fight another day. Post-COVID, there'll be new opportunities coming up. We see that entrepreneurs will come up with new ideas. What we see in Zoom today, we're gonna see something that's gonna be more brilliant to be the next Zoom. If anybody know what is that, please let me know. I would like to talk.
Yeah, in continuation, very good points. I really like that. In continuation, I've got a question because a startup actually who actually reached out to me was asking me this question. We are currently seeking pre-seed funding, but we don't have anything to give you. How can you help us? What's your advice to those startups?
Is it for me, Sonny?
Yeah, so basically this question was in continuation with your points.
Yeah, my first response is, so I see a lot of pre-seed startups, right? They've just started. So the first thing I'll tell them is, if your strategy is to defend against COVID-19, yeah, and it is not really playing on COVID-19, I'll tell them, don't bother. Why am I saying this? If I were an Airbnb, and we know that during this COVID-19 period, they had like a 40% valuation haircut. They have to defend themselves against COVID-19 to come up with maybe some insurance, some initiatives of fund, or to have safe distancing, which just means valuation, just means revenue drop and whatnot. I would tell the pre-seed founders, please come up with an idea that positions you in the post-COVID, rather than what am I doing, just some tactical solution. Yeah, because if you're not an Airbnb now, don't try to be the next Airbnb. Come up with something that says we are positioned for the post-COVID world. So if you're an education tech company, I think that is good for you. If you're a commerce company, so can you be better than what you see in TikTok, or can you be better than what you see in Amazon? So for the early stage, for the pre-seed startup, I do say that they have more incentives to come up with something more groundbreaking, because they have no legacy in terms of technical debt or in terms of investors to pay back, and they can start from scratch. The challenging, the hardest will be those founders that are already in Series A or Series B. And what that means is, in the past 1 or 2 years ago, they had raised at much richer valuation. And now this year, on average, it's like 40% valuation haircut. It's going to be a difficult conversation in the next 6 months, 1 year, when they need to do a bridge round. Hopefully it is a bridge to somewhere and not a bridge to nowhere. They will be much harder. But if you're a pre-IPO company, it's okay to take a 40% haircut, correct? Because on balance, you still have a great company. You just have to quickly cross the line to IPO. And I think that's what SoftBank is trying to do with its long pipeline of companies that are still good for IPO. Just quickly move on. Yeah, so try to be starting a company now, position for COVID-19. If not, try to get to IPO. If you're stuck in the middle, it's definitely more challenging. That's my 2 cents worth.
Great points. I really like those. And yeah, the startup, if it's watching, I mean, obviously the founder had reached out to me. Great points there, Eddie. Thank you. So I'm just conscious of the time. Would like to move into our speaker, Lucas, who has a great project to discuss. You have 8 minutes, Lucas, and we then move to our speakers to ask you questions about your project. You're going to share the screen? Yeah, you're on mute.
Okay, now I'm not. Great.
Yeah, we can see your screen right now.
Great. Well, thank you for this, for all of the information that you provided. We are a startup from Brazil. So what we do is we want to provide a way to create a mass adoption over cryptocurrencies here in Brazil. So we've developed the first cryptocurrency wallet app in Latin America that allow you to use your cryptocurrencies just like you use your bank account and your credit card to make transfers, to pay at any merchant, to pay bills, and even 24-hour cash withdrawals. So the market here in Latin America is the largest untapped market. What it means is that we only have exchanges working here. And in the meantime, these exchanges have more than 1 million holders, and they are trading something like $5 billion here in Brazil. It's just Brazil, it's not over Latin America. And the major problems here are that exchanges have been hacked, pyramid and Ponzi schemes were created saying it was a Bitcoin investment. And the quickest response to all of the people that lost their Bitcoins only in 2019 in one of the pyramid schemes was 30,000 Bitcoins, was your keys, your Bitcoins. You should use an uncustodial wallet. So we are the first one. So we provide a way to save, to send, save, receive, and manage your cryptocurrency funds directly from your app. And we have a lot of big partnerships here, like this with Cielo, which is the biggest payment processor of the country. So we allowed you to pay for a coffee, to pay for anything you want in more than 1.5 million establishments. So you can even buy digital services and products like Uber, Netflix, and stuff like this. It's a prepaid service. You can obviously send Bitcoin to fiat and fiat to Bitcoin, so you can buy and sell cryptocurrencies and use your cryptocurrencies to send money in someone else's bank account. You can pay a Brazilian payment method called boleto, which is an invoice with a barcode. And there's a few international features like cryptocurrency swaps between Bitcoin, Ethereum, Ripple, and other cryptocurrencies. You can even buy your cryptocurrencies using a credit card. It's a partnership with a company with Cielo and CyberSource, which is a security company from Visa that sends the chargeback responsibility to the bank, not to the app itself. So we don't have to be worried about chargeback in cryptocurrency buy. So we are the first one that got the okay response from MasterCard to create a reloadable card, so you can put money inside of the card and using in places that doesn't have Cielo machine, for example, or even to withdrawal in 24-hour cash like ATMs, let me say this. So our business model is an average of 2% of each transaction. There's different kinds of transactions with different fees, but the average fee is 2%. Our traction now, we've made more than $2 million in transactions since January when it was launched. And we have more than 20K registered users with 22% of them active users. Our customer acquisition cost is less than 10 reais, which means $2.50. And our customer pay the marketing campaign in less than 3 months. And we are growing 40% monthly. It's the revenue. Our go-to-market is based on member-get-member, finance influencers that we sponsor. All of the big partners we have, we do a lot of press campaigns, and we provide a lot of content like inbound marketing. And what about the team? We are more than 10 people, developers, designers, finance analysts, and I am that nerd guy that lost 400 Bitcoins in a shield of an online game in 2011. And since then, I've been doing things with cryptocurrencies. I've developed the first sub-acquire and sold it to Santander Bank in 2012. I am an author of 9 books about programming and infrastructure on-demand automation. I've studied accounting, economics, system analysis, and a master's degree in computer engineering. Okay. And Yva.ai is also one of the only 8 wallets members of Celo Alliance, which is an alliance with all of these guys like Anderson Horowitz, Polychain Capital, and a lot of others, which is just like the Libra from Facebook, but it's similar to Libra from Facebook, like Mercedes. And we do receive a round of investment of $300,000, which was the fuel to develop the product and start selling. And now we are fundraising to speed up time and making BitFi the major multi-use cryptocurrency company. So that's it, guys. And if you want to talk to me, please add me on LinkedIn.
Thank you, Lucas. You're perfectly bang on time. You can start the sharing now. Thank you. So Noble, would like to ask you what questions you have for Lucas. I mean, he's looking to raise funds.
How much is he looking to raise?
Yeah.
You mean that's great. You're looking to raise funds. How much? And
yeah, Lucas, when this is Gary, listen, when you do this, you got to come up with what the ask is, right? You got a great background, you've written the books, but you know, what's the ask and what am I getting for it?
Yeah, sure. This
Keep
is
it simple, stupid.
Question.
Remember, Lucas.
Yeah, we are looking for an investment of $1 million for 10% of the company equity. It is not in the presentation because VCs here in Brazil doesn't like it. I don't know why.
Okay.
And so I guess the next question I have for you is, with so many people heavily involved in the trading of crypto and a lot of hodl mentality still going on, my question is really, do people spend their Bitcoin in that way, or do you have any kind of a need to add a kind of a trading component or a portal to allow people to trade on this particular app? Because I love all the distribution mechanisms that you have, and I like the infrastructure you built. But most people who are really locked into any crypto, very, very much hodl. They're thinking Bitcoin's going to $100,000, $1 million at some point. So they're not very overly enthusiastic to spend them based on any fixed price.
Yeah, the main reason for nobody spend their Bitcoins as currency is because there wasn't a way to do that. That's the first thing. And I truly believe that there's a lot of things that you can get with this information. Like if we have a cryptocurrency like dollars here, why not pay for anything in dollars, in dollar tether or CUSD, which is the Celo dollar? So you can pay for anything in dollars if you're in Brazil. Why not to do that? So that's one thing. And the other thing is that we've been looking to cryptocurrencies as an investment. And I am the guy that in 2011 was using cryptocurrencies to send money to pay for something. So I know the difference between being used for everyone and being just a thing for nerd guys like me. But I truly believe that if it will be Bitcoin or it will be a stable coin, people will trade cryptocurrencies for service and goods, and I'll be the player doing that.
All right. Okay, Noble, if you don't have any questions, Justin has a question. Yes.
Yeah, so I know you said your growth was 40%. Is that since January or is that month over month? And just as a follow-up, do you see this being, with some of the political instability in Brazil, and not throwing stones since I'm from the United States, but do you see this as people using the wallet to move into Bitcoin and then move into CUSD, or to move out of Brazilian currency to move away from inflationary as an inflationary hedge? And do you see that as more of a use than perhaps buying things? And is that something you guys use as part of your customer acquisition strategy? And maybe you could speak to that a little bit.
Very good question.
Yeah, actually, here in Brazil, there's no way to buy dollars easily. So if you can get a part of your money or your investments and be stable in dollars or gold, this is something that we are looking for to provide here in Brazil. In the meantime, we want to provide a way to spend the currency that you want to in a way that you want to. That's the main thing.
Great.
And on the,
Does that
on the
answer?
growth,
Did that answer your question?
yeah, just on the growth point, have you guys, is that 40% since the beginning of your public run, or is that month over month?
Yeah, it is month over month, and it is about our revenue, not only for the users.
Okay.
Awesome.
Thank you, Lucas. Thank you, Justin. Peter,
Yes.
question for Lucas.
I actually don't have any questions, and I actually need to jump off. So I appreciate the panel though. So thank you.
Okay, no worries. Thanks a lot for joining our session, and hopefully see you more of our sessions, because we have this. Thank you. So okay, Gary.
Yeah, I mean, the situation, Lucas, it's all about the ask, right? So when you're going down through this, if the first part of your presentation, you want to wow them. And then what kind of impact is this going to have? I mean, like in general, if somebody doesn't understand Bitcoins, what kind of impact is this going to have? And who's in the market today? So that would be really interesting from my perspective. So I think you've got, how many months have you been doing this? Is it the beginning of the year?
Yeah, I've developed this technology with a team for about 3 years. It's 100% the technologies, and we launched on January of this year.
Mm-hmm. Yeah, so I mean, we could have a more in-depth conversation about it. I think you've got something, it's interesting, right?
Yeah,
And
sure.
so I've worked with, the top, the CEO of Visa, for instance, a lot of different companies, and it's interesting. And the good news is you've got growth and you got revenue coming in. Those are things that are really interesting for me.
Yeah.
Great,
Well,
awesome.
I've added you on LinkedIn, and feel free to contact me. I've already added you there, so
Okay, all right, sounds great, but keep up the good work.
Thank
All
you.
right, thank you, Gary.
Thanks.
Thank you,
Bye.
Gary, for the comments. Eddie.
Thank you for
So have we lost Eddie, or is it me? I can see him frozen. Okay.
Yeah, it's frozen.
Yeah, I can hear you. I think he's
Oh,
frozen.
you can. I can see you. I think he's frozen. So if you anybody do not have any other question for Lucas, I have a question. How has the coronavirus, the pandemic, appetite for digital or the cryptocurrency?
Yeah, coronavirus here in Brazil is a problem because people here needs to go to work. Nobody can have access to, not nobody, but people doesn't have access to internet, so they can't work from home. They need to go to work, to the job, to the office. So it is spreading, and it is a huge problem here. It's controlled by the government. They say it's okay, and the hospitals are doing a nice job, but it is a problem, and this makes people be more safe in home, and people are looking for different kind of investments, and cryptocurrency is one of them. So we think it was good for us, actually.
Thank you, Lucas. Eddie, you had a question for Lucas before you lost the connection, I guess.
thank you, Sonny. Thank you, Lucas. I don't have any question for now. Thank you.
Okay. So, okay, who's going to take this question? How has the pandemic impacted the appetite for digital currency? Noble, Justin?
I think the pandemic has actually been probably the best thing that happened to cryptocurrency, to be honest, and it's unfortunate, but people are starting to look at cryptocurrency as a real flight to wealth. You know, in days past, gold would be through the roof right now based on all the inflationary pressures, based on all the money that's being printed. And yet gold, you know, while having moved the needle, is nowhere near the usual entanglement that it has with the US dollar. Oftentimes you'd see, you know, gold would be in the, several thousands of dollar range, almost 5,000, 10,000. And gold has not really moved the needle. But on the flip side, we're seeing all these exotic cryptocurrencies driving up. Ethereum has become more aggressive. We've seen Bitcoin actually find a base here as opposed to tanking. And so the legitimacy, or whatever this has happened, it's created legitimacy around crypto. And then you have more, Lucas brought up Ponzi schemes and the like. You have a ton of them in which people are now, who've never looked at cryptocurrency, are jumping into all these different crypto direct marketing programs and the like, who are just average everyday people. But I think that's always the first exposure, right? That people are introduced to it in a surprising way, and then find that that they've all of a sudden lucked up on money. So it's a very interesting space where people are looking at crypto as a money-making opportunity. And that's why I was just kind of curious with Lucas how he was building that into the platform, because everyday people are trying to find other forms of generating money, and crypto is now part of the gestalt, it's part of the conversation.
Great points. Absolutely noble. Justin.
Yeah, I know. I just on that, I was just going to say, I mean, that seems like the story of Lucas's startup, is just the kind of the flight and the legitimization of cryptocurrencies as an inflationary hedge, and Brazil being the local case, and you're seeing, like Noble said, worldwide, we're seeing them move as people trust, kind of that was always the, from Satoshi onward, that was like kind of the case, right? The theory would be, hey, we're going to move away from these regulatory structures and these kind of government controls. And you could say that the opposite has happened with regulation and like kind of the MasterCardization of cryptocurrencies. But that was always the thought, right? We're going to move away from gold and these traditional inflationary hedges and into crypto. And that's kind of COVID's, like a lot of things, has kind of taken that and moved it up a decade. And I think that's like kind of the story of Lucas's pitch that we just heard.
Thank you, Justin. Anybody else would like to take this question? If not, we just have the last thoughts from each one of you before we close the session. Anybody taking the question? Anybody else? No. Okay. So, what are your last thoughts, Gary, before we close the session? For both for investment and startups, what are your last thoughts?
Yeah. So, from my standpoint, this is a great opportunity for them. Don't become into this negative spiral. Look for the silver lining. Get out there, build your revenue, build the opportunity, just as you've seen with Lucas today. Get out the door, continually do customer discovery and iteration, validate to make sure you're doing the right thing, because you don't want to waste money. Stay positive and, focus on revenue, focus on your team, and keep innovating. So get stuff done. You can reach me, Gary, at GSDVS.com, or you can get me on LinkedIn, Gary Fowler. I'm happy to talk to you. Keep it positive and go get them.
Absolutely. Thank you, Gary. Thank you. Eddie.
Do you mean my closing comments for this session? Or
yes.
My own comments? My 2 cents worth. Mankind has survived like pandemics, volcano eruptions, earthquakes, wars, so many world wars, right? So what is COVID-19 going to do to mankind? Nothing. 100 years from now, when we are still around, we'll just think of it as, a small reset in the greater scheme of things. Technology is going to improve our lives. Government is going to be more responsive. People are going to learn that they can work, live, and play anywhere. And maybe there will be a rise of new digital currencies that give people more choice. So that is the power of technology. So we should be happy that this is a great opportunity for us to see what is technology giving us. So hopefully to see more use cases, and for early stage entrepreneurs to benefit more, and also benefit investors, everyone. Yeah.
Thank you. Very, very practical points there, Eddie. Justin, closing thoughts, closing comments, then we go to Noble.
Yeah, no, just for startups that are looking to make it through, definitely it's important, like Eddie said earlier, cash flow is king. And so it's really important, if you're going to think about surviving, and cut your burn, and have difficult conversations now. But when you're doing that, think about the future and focus on the future. And when you kind of echoing some of Gary's comments, focus on your MVP, or your minimum viable product, to get as many reps or repetitions as you can, and then really get good product market fit. And then once you do that, once you got good product market fit and your go-to-market is solid, then you can just ramp up and you're off to the races. And really, I'm with Eddie and everyone else. I think bullish on people. So I think at the end of the day, if you got it, you got it, and just you got to take advantage. You got to set yourself up to take advantage of the opportunities when you get them.
Absolutely. Thank you, Justin. Noble, your closing thoughts, closing comments.
Yeah. I think that the best statement was, when Eddie said that we've survived worse, essentially. And I think that the biggest closing thought I kind of take away with this is that as a startup, you have to stop focusing on the investment landscape as only angel investors or venture capitalists. There's accredited investors, which we work with all the time. There's crowdfunding and crowdsourcing. There's a lot of pathways to success that aren't just the one way. And so don't let anything deter you from getting the capital you need to grow your business, regardless of what it's required. And, anybody can reach out to me. Like I said, I'm a member on the advisory board for Accelerator. Reach out to me there, or just LinkedIn.com, LinkedIn.com. And I'm happy to answer any questions you may have, any advice I could give you to kind of steer you in the right direction. I've been a startup founder multiple times for the last 30 years. I get what it's like to be in a place where you have great ideas, but it's difficult to get them off the button. So yeah, just reach out to me, LinkedIn, Noble Dracone.
Excellent, awesome. Before we let go of you, how many of you here know what is algae farming? Raise hands. Justin, okay. I've got it, the reason. Sorry, Noble, you're saying something, but you're on mute.
No, I just said algae farming. I thought you said LG, but yeah, algae.
Algae, okay. Sorry about my pronunciation. Yeah, algae. So do you know anything about that market? Okay, great. So I've got a great project pitching as a startup from Texas, Houston. They have tokenized as well. So do watch the show tomorrow, 8 p.m. Singapore time. You can actually log into www.latoken.com/events and click on the session. And it's going to be an amazing panel as well with speakers, and this competition that's going to happen. So yeah, that brings us to the end of the session. I was really felt very energetic throughout the session because of your participation. Thank you so much. Keep rocking. All the best to you, Lucas, for your fundraising. Stay healthy, stay safe, and good night.
Thank you. Bye-bye.
Bye.